So let us just look at incomplete records and what we're supposed to be asking ourselves. Why do organizations have to operate without proper books of accounts? So when we come up with incomplete records, it means the taxpayer does not maintain proper books of accounts, but he normally has some summaries for assets and liabilities and the bank statement. So when you're going to be having the problems with the incomplete records, we basically prepare the debtors control account stock receivables, which is basically used to determine your credit sales. And also we are going to be preparing the creditors stock payables control account, which is going to be assisting us to come up with the credit purchases. From that information, then it means we have to be looking on the we have to be preparing the books of account from the scratch so that we can be able to determine how much the taxpayer should be able to pay. So in this case, I can just be able to say it arises, incomplete record arises, it arises where the taxpayer does not maintain proper books of accounts. Proper books of accounts. That account does not maintain proper books of accounts. But as a summary, we normally have a summary of assets and liabilities, and bank statements. Normally have the assets and liabilities together with the bank statements. Now, from that information also, we can say that we prepare the following accounts. We prepare the following accounts when determining the taxable income. When determining the taxable income of such taxpayer, right? Of a taxpayer, right? So which account are we talking about? I have said just prepare the first one, which will be the debtors stock control, or the debtors stock receivables. We are talking about receivables control account, right? Receivables stock control account, which I have said it is normally used. It is used to determine, is basically computed to determine the amount of annual credit sales. The amount of annual credit sales. Which they form part of your assets. So in this case, you have to be asking, how am I supposed to be preparing my debtors control account? Debtors control account. Then I'm just going to be opening my T account there. And I'll be able to say, we are going to be debiting all the assets, and we have to be specific. All the assets, the balances brought down are normally debited, but the liabilities are normally credited. So in this case, the balance brought down falls here, right? The balance is brought down is there. Then we are going to be having the balance carried down here, which you are going to be putting there. Then we have to be factoring all the other valuable items which normally affect the debtors control account. One, we have to be looking on the debit note issued, which is normally debited. It increases my sales. Debit note issued. Debit note issued, you place it there. We normally have dishonored checks. Dishonored checks, you normally put them there. They also increase your sales. But we normally have some few elements which normally reduces your debtors control account. And the first one will be, we talk about receipts. Sometimes we can talk about bank, right? Our receipts, which we are going to be paid, right? Which are going to be paid from the sale, which you have already made. So our receipts will be able to reduce the total sales that we have because we are going to be receiving some cash. So those are the receipts from the customers. We have the credit notes. Credit note issued. Credit note issued, you put it there. We also have bad debt written off. We have bad debt written off, right? Written off, we put it there. Then also we have things like discount allowed. Discount allowed, you're also going to be putting it here, right? We have things like return inwards. Our return inward will be put, you should be considering it there. So what you are supposed to be putting down here, you're supposed to be putting your balances in order, and they are supposed to be balancing. And because you know that what we have been looking at the credit sales should be our balancing figure, right? Should be our balancing figure. The credit sales should be our balancing figure, and you're going to be putting it there. So the totals are, you put them there, and also the others will be able to yes, the balances should be equal, right? So it means our credit sales, because they are the ones that we are looking for, should be our balancing figure. Now, to get your total sales, to get my total sales, I'm going to be taking my credit sales plus cash sales. The total sales, you're supposed to be taking the credit sales, which you have already gotten under your debtors control account, and then the cash sales, if they exist in the question given. Now, let us look on note number 2. We are looking on number 2 here. We are looking on something called creditors stock. We have creditors to payables control account. Creditors to payables control account. And in this case, we are saying that it is basically used to determine the amount of credit purchases. To determine the amount of credit purchases is basically used to determine the amount of credit purchases. So also we are going to be opening our T accounts. Here we are discussing about creditors control account. Just open it here. And then the balance brought down, you put them here. Right, and then you are going to be having balance carried down. So some of we might be having some items here, right, which affect the credit side of our debtors. Then the opposite of them normally affect the creditors control account of the debit side. Let me look on because the first one is the receipts from the customers. When you go to the creditors, should be payments, right? They are supposed to be payments. They are supposed to be payments to suppliers, right? The payments to suppliers, we are going to be put them there. We also think of creditors not issued, credit not issued. So it means here we are supposed to be having credit notes. Credit, because this is issued, here should be received. Should be received there. The other one we are discussing about the bad debt written off. We don't have that. We are going to be looking on the discount allowed. Here we are going to be having discount received. Discount received. We put it there, right? Here we are discussing about return inward. Then it means on the credit should be the return outwards. We are supposed to be having the return outward there. Now, the balances carried down, I've said there's going to be on the debit side. So what normally affect the bad debts or the credit side of the creditors control account? When I look at it here, we are discussing about the debit note issued. It means here should be the debit note received. The debit note received, you put them there, right? The debit note received, you're going to be putting them on the credit side. Now, in this case, we have to be coming up with our balancing figure where we are supposed to be getting our credit purchases. Which should be your balancing figure. Should be our balancing figure. You just need to put them there. Get your totals. Get your totals there, right? So your totals will be put down there. To be able to put them down there. So how am I going to be getting the total purchases? I just say to get my total purchases, I should be taking the credit purchases plus cash purchases. I should be taking the credit purchases plus my cash purchases. I just need to put them there. In this case, we are also going to be coming up across over the computation of the cost of sales, because we have to be consolidating our books. So how do we normally get our cost of sales? Our cost of sales. So I just say, to get my cost of sales, we normally take our opening stock. Our opening stock, we add our purchases, then we less our closing stock, right? That is the thing that we are going to be doing as we start our illustration. So I just want to do my illustration straight away because I know we don't need or we don't have any questions so far. Let me just do my illustration, and I will be able to start with November 2016, question 1B. November 2016, I will be able to start from that end. November 2016, question 1B. Should be question number 1B. Alibaba, someone to read, please.
I'll read.
Okay.
Ali and Baba are partners in a small firm trading as Alibaba Enterprises. They share profits and losses in the ratio of 2:3, respectively. The following extracts were obtained from the records of the firm for the year ended 31st December 2015. Partners' current account extract. We have the debit and the credit. Drawings. Ali 40,000, Baba 60,000. On the credit, balance brought down 100,000 for Ali, 200,000 for Baba. Salaries to partners 70,000 for Ali, 120,000 for Baba. Interest on capital 50,000 for Ali, 40,000 for Baba. Number 2, assets and liabilities. Saloon car cost as at 1st January 2015, 2.4 million. 31st December 2015, 2.16 million. Trade receivable 1.8 January 2015, 960,000 31st December 2015. Donations 0 as at January 2015 and 140,000 as at December 2015. Salaries and wages accrued 840,000 January 2015, 1.6 thousand December 2015. Electricity paid 170,000 January 2015, 200,000 December 2015. Furniture 200,000 January 2015, 180,000 December 2015. Inventories 360,000 January 2015, 500,000 December 2015. Trade payables 1.5 million January 2015, 1.2 million December 2015. Extracts from the bank statement. Payments to suppliers for goods 840,000. Receipts from customers 2.2 million. Payments for customers hardware 600,000. Payments for computer software 120,000. Catering services, catering fees 90,000. Electricity 60,000. Salaries and wages 700,000. Legal fees 160,000. Legal fees amounts to 48,000. Relates to cost of negotiating purchase of business premises, while electricity paid include a deposit of 15,000 to the power company. Number 5, each partner had obtained a 10% loan of 200,000 from the partnership for acquiring their private assets. The interest on loan was included in their share of interest on capital. Required a statement of adjusted taxable profit or loss for the partnership for the year ended 31st December 2015. And 2, total taxable income or loss for each partner.
Thank you so much. I just want to clarify something before we start doing our question. The thing which I just want to clarify is about the treatment of the two things here. I have already discussed about the debit note, right? And when we are discussing about our debit note, it means to correct an undercharge. So here we just told, you just tell me, it is used to correct undercharge. It is basically used to correct an undercharge. So it means if issued, right? If it is issued, in this case, we are supposed to be saying that is to customers. If it is issued to our customers, it is going to be increasing our sales. It increases our sales, right? We also saying if for example is received, if received, that is right. We are talking from suppliers. From suppliers, we are saying it increases. It increases our purchases. It increases our purchases. Now we go to the credit notes. We have our credit note and we are saying the credit note means to correct an overcharge. An overcharge, right? It is used to correct an overcharge. So in this case, we are saying if issued, if it is going to be issued, in this case, that is to customers. If it is going to be issued to customers, it reduces our sales. It reduces our sales. Then the other thing that we have to be noted down there, if received, that is from suppliers now. If received from suppliers, it reduces our purchases. So when I have checked on the question, this is just some few things which you are supposed to be mastering as you do your revisions on that field. I just want to go back to my question here, where we are dealing with the November 2016 question 1B. The first thing I have said, when you are dealing with the incomplete records, let us first look on the credit sale and purchases. So let me start by looking on the credits. Let me talk about debtors control account. Debtors control account, right? So at first I'm going to be opening my account for the debtors control account. And in this case, I have to be looking on whether I'm given the balances for both, right? When I look on the additional information number two, I can see we are being given inventories. Is it inventories? No. We are discussing about trade receivables. When I'm looking on my trade receivables, I can see at the beginning of the year, we had 1.8. So I just say balance brought down, right? Balance brought down, we have 1.8 million, right? Then on the same note, you have to be looking on the balance carried down. The balance carried down, we have been given 960,000. 960,000, right? Those are the two things given in that question. Then let me see if we have some items which are going to be affecting my account as we continue. When I look on note number 3, I can see we have some receipts from customers. Extract from the bank statement. Bullet number 2, we are being given the receipts from customers, 2.2 million. So here we have receipts of 2.2 million, right? 2.2 million. When I look on the question, I can't be able to see anything else which is affecting our ledger. So in this case, what I'm supposed to be doing is to do my computation for the totals, right? So that at the end of the day, I can be able to get my credit sales. I can be able to get my credit sales. So in this case, it means the total on the credit side should be that 160,000, right? That 160,000, and it should be the same on this side also, right? That 160,000. Now, in this case, when I take that 160 minus 1.8, I'm supposed to be getting my credit sales. So that 160 minus 1,800, we have 1,360,000. 1,360,000, right? 1,360,000. Now, when you are doing the totals in this case, we are supposed to be calculating the totals, total sales, right? No andiki hapa ndani kama mimi. So in this case, we have said, take your cash sales plus credit sales, right? Now, my cash sales in the question is not provided. So my cash sales is 0 plus my credit sales, which is 1,360,000. So it means my total sales in this case, we just have 1,360,000. Now, let us look on the creditors control account. Creditors control account. And under the creditors control account, we do the same. The balances we say
a quick one
down here.
Hello?
Yes, yes.
For this total sales, we write in the same account. Ama we write separately.
No, I have said mimi nimeandika tu hapa because of my space.
Oh, okay.
You're not supposed to include it here, no. It should be somewhere here. Now, in this case, when I look on my payables down there on note number 2, the balance brought down, we are being given 1.5 million. And then the balance carried down, we are being given how much? The balance carried down at the end of the day, we have 1.2 million. The 1.2 million. Now, let me look on whether I have some elements or items which are affecting here. And I can see note number 3, the first one, the payments to suppliers for goods, 840, right? Payments. We are being given 840. Hakuna kitu ingine ina affect the account. That is how easy the question was. So in this case, we can see the total here should be 2040,000. Also, the credit note should be, the credit side should be 2040,000. Ask yourself, how much is my credit purchases? Right? Our credit purchase should be how much? So I just need to take 2040 minus 1,500, and I'm getting 540,000. Right? 540,000, that will be my credit purchases. And when you look on the question, we don't have the cash purchase. So to get your total, you just tell me the total purchases of mine now will be equal to how much? 540,000. Right? Will be 540,000 because we are taking the credit plus the cash purchases plus the cash purchases. The last thing that I just want to compute, it is our total cost of sales. Very simple now. Before I start my question, it is simple as that. Good. Now, I just want to look on my cost of sales. I have said, take your opening stock. Take your opening stock, add your purchases, then minus closing stock. So the opening stock already are existing on note number 2. I can see on the area of inventories. We are being given the opening is 360,000. Our purchases, we were able to get 540,000, right? Then my closing, right? My closing should be 500,000. So it means my cost of sales should be around 400,000. 400,000. Now, I just want to start my computation. Here, we are discussing about Alibaba Enterprises. Alibaba Enterprise, we are discussing about 2015 taxable income computation. Taxable income computation. Taxable income computation, right? So we have 2 columns here for Kenya shillings. And we are going to be starting with our sales. So the sales which we were able to compute, we got the totals, were amounted to 1,360,000 here. Right? We less our cost of sales, which we were able to get around 400,000. Right? What will be my gross profits? I will be able to say my gross profit should be 960,000. 960,000. What we are going to be deducting here, less allowable expenses now. Hapa tunatengeneza pure income statement. But based on the acceptance, what the items which are declared by the Tax Act to be allowable. So that is what we have to be checking there. Now we have things like note number 3. We have just dealt with the first 2. So the other one is the payment of computers, which is the hardware. So in this case, you know very well that in taxation, we don't recognize any purchase of the asset, but we recognize the capital allowances. In the capital allowances, in this case, let us give the WTA for those items, right? For hardware, which qualifies for 25%. 25% of the total cost, which we have been given 600,000. 600,000, 25% of 600,000 should be around 150,000, right? Should be 150,000. Now, we also have computer software. You also do 25% of 25% of the total cost, which you have been given 120,000. This comes to around 30,000. 30,000 there. Let me proceed by looking on the catering fees, allowable expense. Catering fees will be able to amount 90,000 shillings, right? The other one, Rose, kindly switch off the video. The other one is electricity. So the electricity will be, we have to be doing some adjustments since under the accounts for electricity, I can see we had some prepayments. So under the electricity account there, we have to be asking ourselves, how do we normally deal with, for example, the prepayments and accruals? And I'll just be able to know that when we are dealing with prepayments, right, we normally add the balances at the beginning. So in this case, it means I have to be taking, in our case here, the electricity which we were able to pay during the year is 600. At the beginning was 170. Then we less for balances at the end, which is around 200,000. 200,000. Right? I have said when you are dealing with prepayments, add the balances at the beginning, right? And then you less the balances at the end. So if we were dealing with the accrual, right, we are supposed to be subtracting the balances at the beginning, and then we add the balances at the end. That is where we are adding. So this is 770 minus that, we are getting around, how much are we getting?
Excuse, I think electricity is supposed to be 60, not 600.
Thank you so much, 60. Then also I have seen we have things like prepayments. We have, for example, note number 4, we are being told legal fees amount to 48,000 shillings relating to cost of negotiating purchase of business premises, while electricity paid included a deposit. We subtract our deposit also, right? We less our deposits again, because the deposit is always something that is not yet to be incurred. So we subtract it there. So in this case, you just need to be able to tell me that 60 plus 170, right, minus 200 minus 15, we are supposed to be getting 15,000. We're supposed to be getting 15,000 here. Also, we have salaries and wages. During the year, we were able to pay some salaries, but we had some accruals half there on your accounts. I can see that salaries and wages accrued. So in this case, during the year, we paid 700,000, right? So we take 700,000, we subtract the balances at the beginning since it is an accrual. So minus 840 plus, right? The balances at the end, which is 1.6 million. Which is 1.6 million. So how much it is? How much is that? How much is that? So in this case, it will be 700 minus 840, right? Plus 1600. And we are getting 1460,000. We are getting 1460,000. The other expense which I can be able to see there, we should be discussing about the legal fees. The legal fees. And when I look on the legal fees provided, which you were able to pay during the year was 106, and there is an adjustment which needs to be done there. So if it is 160, I can see note number 4, we have been told the legal fees which was amounted to 14,000 shillings related to the cost of negotiating purchase of business premises. It is a disallowable expense, right? Because if biashara ikukua bado imeanza. So 160 minus 48. 48 is a capital expense and should not be affecting the business. So this comes to around 112,000. That comes to around 112,000. The biggest question will be, right, what will be my total expenses? How much will be able to, how much is my total expenses? In this case, I just need to say 150 plus 30, that is 180, plus 90, right, plus 15, we had 1460, we had 112. Here we are getting 1857,000. When you're subtracting here, we are going to be getting the business loss at the end of the day, which equates to 897,000. This is a loss. That is your loss there. Now, in this case, it should be called the business loss. And since we are dealing with the partners, right? Since we are dealing with the partners, you can be able to see at the beginning of the question being told that Ali and Baba are partners in a small and farm trading as Alibaba Enterprise. And we are saying they share profits and losses in the ratio of 2 to 3 respectively. So in this case, let us look on the computation of the partners allocation schedule. So allocation schedule, what do we have? We have someone called Ali. We have Baba here, right? Then we have our totals at the end of the day. Let me see whether my body is fully visible at that point. Good. Now, in this case, when you're looking on it in that aspect, let me just clear it here. We know very well that the items which you normally include in the allocation schedule, we normally have salaries to partners if it is given. Salaries to partners. We have interest on capital. Interest on capital. I think those two are the only one which are existing here. But let us look. When I look at it, let me start with the salaries. We have been told in the question that the salaries to partners were 70. I can see 120, right? Here we have 70,000 here.
Excuse Malim.
Yes.
I think I'm getting confused. Why have we only adjusted for the items and the extracts from the bank, and We are not considering under assets and liabilities.
Like which one?
Like for example, saloon car
Saloon car.
will qualify for WTA and also furniture.
But there is no any additions which were done during the year.
Yes, but WTA, this will be dealt on the closing balance also.
So what are we going to be adjusting there?
I don't know how to go about.
If we could have adjustments, if we could have any inquiries from both, we could already look on those accounts. There is nothing which is affecting our income statement because there was no acquisitions for saloon cars and also for furnitures. So nothing is affecting our income statement. You cannot take the balance brought down, you give us the WTA. We should be having some acquisitions which were done during the year.
Okay.
Now the
So-
salary to, sorry?
So we'll assume that these assets had already, like the WTA, like imemaliza hiyo WTA yake, that allowance.
Yes.
Okay.
Now, the salaries to partners we have for A, which is 70,000. For Baba is 120, getting 190,000. The interest on capital, I think there are some computations which need to be done by considering the last point, note number 5, where we were being told that each partner has obtained a 10% loan of 200,000 from the partnership for acquiring their private assets. So the interest on loan was including the share of interest on capital. So when you look up there, we have to be subtracting that. The interest on capital, for instance, for Ali, which is 50,000, you just need to be taking 50,000. And then you subtract 10% of 200,000, right? This is 20,000. So 50 minus 20, you get 30,000, right? The other guy, the interest on capital was 40, right? Minus 10% of 200,000, and you're going to be getting 20,000 here. The total interest on capital is around 50,000. Right, 50,000. Nothing else I have seen affecting is affecting. We don't have bonuses, we don't have commissions, we don't have interest on drawings. So we just need to be closing our question by sharing our loss here to the partners. So loss sharing here. And remember the ratio is 2:3. So in this case, the business loss of ours, the business loss unakuja unaniwekea hapa 897,000. Right? That is our business loss there. That is our business loss. So the biggest question is, how much are they supposed to be sharing at the end of the day? How much are they supposed to be sharing at the end of the day? How much are they supposed to be sharing? Someone? How much? How much? Choma, how much are they supposed to be sharing? Mimi napata 1137. Na wewe Rose? How much are they supposed to be sharing? The salaries and the interest are supposed to be deducted from your income, which you are supposed to be getting here. But because ours is a negative, right? So you just need to be taking negative 897 there, minus 50, minus 190. And that is how you are arriving at 237,000. Then the loss is supposed to be shared on the ratio provided by the examiner, whether they are sharing on equally, or you are being given a proportion in which they are supposed to be sharing. For example, ours is a proportion, so I just need to multiply by 2 and then I divide by 5. So the first one will be able to get 454,800. Right? Then the other one will be 1137,000 times 3 divided by 5, getting 682,200. 682,200. What will be their losses here? What will be their losses? So in this case, I just need to take 120 plus 20 minus 682,200. I'm getting 542,200. Right? The other one will be, this I think is 100,000 minus here. You're getting 354,800. 354,800. 354,800. 354,800. Any question up to that point? Any question? Any question? Good. So let me go to May 2017. May 2017 now. May 2017 should be question 5B. So is it starting from A and B? Rose, go on.
A and B are partners trading as AB enterprises, sharing profits and losses equally. The following is a statement of comprehensive income for the partnership for the year ended 31st December 2016. We have sales in thousands, sales 40,450, we less sales returns 1,200, totaling up to 39,250, less cost of goods sold 39,250, gross profit. Sorry, the less cost of goods sold 19,550, gross profit 19,700, less discount received plus discount received of 350, totaling up to 20,050, less expenses, rent 1,850, bad debts 400, wages and salary 6,100, loan interest 400. Kindly scroll down. Depreciation 4,200, insurance 1,450, repairs 300, electricity 750, with a net profit of 4,600. The partnership is under tax investigation, and the assessor obtained the following details from the firm's records for the year ended 31st December 2016. They have one, balances of assets and liabilities, 1st January 2016 and 31st December 2016. We have them in thousands. Inventory 6,100 at 1st January 2016 and 4,200 on 31st December 2016. Machinery 84,600 1st of January and 97,000 at 31st December. Rent prepaid, we have 800 shillings, and 31st December we have nil. Rent owing, nil on 1st of January, 950, 31st December 2016. Debtors 9,300, 31st December 7,500. Loan from bank at 8% interest per annum, 6,000 on 1st of January and 6,000 on 31st December. Loan interest owing, nil on 1st of January, 200 on 31st of December 2016. 2. Receipts and payments are as follows. We have them in thousands of shillings. Receipts from debtors 26,400, cash sales 72,400. Payments, we have loan interest paid 400, electricity 750, rent 240, purchase of machinery 16,400. Number 3, rent expense related to A's private residence. In addition, electricity paid included 50,000 shillings for A's private residence. 4, the firm issued credit notes amounting to 1.2 million shillings, which was erroneously posted as 200,000 to the relevant ledgers. Included in the sales figure is 30,000 shillings for interest on drawings by B and proceeds on disposal of machinery of shillings 1.45 million. The machinery had cost 4 million with an accumulated depreciation of 200,000. 6. Receipts from debtors included 440,000 shillings contributed by new partner C as his capital on 1st October 2016. The profit and loss sharing ratio changed to 2:2:1 for ABC respectively. Purchases amounted to 19.25 million shillings, which included goods withdrawn by B, valued at 300,000 shillings. 8. Salaries and wages included accrued salaries to the partners at 2.4 million shillings, shared equally among all the 3 partners per month as applicable. Required, as a tax assessor, compute the net profit for tax purposes for the year ended 31st December 2016, indicating the taxable. Can you scroll down? Indicating the taxable income for each partner.
Okay, thank you. Now let us look on the requirement here. We have been told that the tax assessor compute the net profit for tax purposes for the year ended at 4 December 2016, indicating the taxable income for each partner. And in this case, regardless of the much information provided, the first thing that I'm supposed to be doing is the computation of the credit sales and purchases. We are supposed to be starting from that point. When I look on additional information number 1, the balances are already provided there by the examiner for the beginning and the ends. So yours is just to open those accounts, get the credit purchases, do other adjustments as per the additional information, and then you'd be good to go. So let's start by looking on the debtors control accounts. Debtors control account, right? We just said the balance brought down should be on the debit side, right? And the balance brought down, as per the question, we are being given, when I look at it here, let me open my question. I can see we are being told that we are being given the debtors at the beginning was 9.3 million. 9.3 million, right? And then we have the balance carried down. Our balance carried down should be, we are being given 7.5 million. So, and also just remember the examiner can be able to interchange. The end here being the first one, and then the beginning here being on the other side. So the arrangements examiner is interchange, so it's upon you to check on that. Now, when I look on the items which are going to be affecting here, I can see note number 2 somewhere here, note number 4. The firm was able to issue credit notes amounted to 1.2 million, which was erroneous posted at 200,000 to the relevant ledgers. And in this case, when you are looking on the credit note issued, we say it's going to be affecting ourselves. Credit note issued. So how much was the credit note issued? Previously it was 1.2 million, but they erroneously posted 200. So how much was not posted? You just put the difference here, which is 1 million. Which is 1 million, which was not posted. Now, in this case, we can see we have to be looking whether we have some receipts which we are able to pay. And when you look on the additional information number, we should be having some, let me check how much. How much was this? Let me check here. From the additional information provided, you're being told note number, which note here? So let me check here. In note number 2, we have been told we have some receipts from debtors of 26,400,000, right? But when you look on additional number 6, we have been told the receipts from debtors include 440,000 contributed by the new partner C as is capital. That is supposed to be, that is not part of the receipts, that is a capital, so should be deducted here. So you just tell me the receipts. When you look on the receipts, we are discussing about, is it 26? It should be 26,400, yes. 26,400 minus 440. So that we can be able to get our receipts from the sales that we sold. So 26,400 minus 440. And we should be getting 25,960,000. 25,960,000. I think there is nothing which is nothing else which is affecting these accounts. Let me get my credit sales, which should be my balancing figure. Which should be my balancing figure. So what is my total there? Very clear. My total should be 25,960 plus 1 million plus 7.5 million. I can see we are getting that 4,460. Then we subtract 9.3 million. And we are supposed to be getting our sales as 25,160,000. Calculate your total sales. When you look on my total sales, I said take your cash sales plus credit sales. So my cash sales should be how much? When I look on the information provided in the question, we can be able to see my cash sales was 72,400,000, right? Plus my credit sales, which is 25,160,000 minus, right? When you look on the information provided there, in note number 5, we have been told included in the sales figure is 30,000 shillings for interest on drawings by B and proceeds on discovery of machine of 1450 should be eliminated. It should be subtracted here. So here we are talking about 30,000 minus 1450,000. So our total sales should be how much? Our total sales should be how much? So plus 72,400 minus 30 minus 1450. Now you can see we are getting our sales to be 96,080,000. That is my total sales. 96,080,000 will be my total sales. Let me look on the total purchases. Because already the purchases are provided in the question, let us look on whether our purchases are being affected. Because note number 7, we have been told that the purchases amounted to 19,250, which included goods withdrawn by B amounting to 300,000. That is affecting the that should be affecting the purchases. So in this case, when you are doing your because our total purchases, let them remain as 19,250. 19,250,000. Because when I'm going to be calculating the cost of sales, remember we are going to be taking our opening stock, right? Our opening stock was how much? When I look on the question here, we have been told the opening stock was amounting to the inventory. It is 6.1 million. Let me just minimize it, right? 61. Then we had our purchases. Our purchases which were 19,250, right? Then we less drawings. Our drawings were 300,000, and also we less closing stock. We less our closing stock, which was amounting to, when I look on inventory, 4,200, right? What would be my cost of sales? So 6,100 plus 19,250 minus 300 minus 4,200. I can see we are getting 20,850,000. 20,850,000. That is adjustment work. Now, in this case, now let me open my my computations. We are discussing about doing a question for A, B, C, and C partnership. A, B, and C partnership.
we are discussing about which year. We were being told it should be 2016, taxable income computation. Taxable income computation. Taxable income computation. Here, we are looking on two things. And we are going to be following the income statement provided there, which they were using. So in this case, let me just limit my thousands, right? Now, let's start with sales here. Our sales, we have said, they are totally to, I think even my space is not enough. Let me just clear here, because already we have to be separating the months. Just clear it here, right? That is okay. So in this case, we are discussing about separating. The new partner was able to come in on October. So I think we are supposed to be discussing about 9 months. With the operating two partners. And also we are discussing about 3 months. 3 months there. So in this case, we have 2 columns of Kenya shillings, so reduce them to thousands. Kenya shillings, it should be looking like this. Right, that is okay. So in this case, when we start with sales, we just need to apportion them. We said our sales are amounted to 96,080. So when I take 96,080 times 9, you divide by 12, I can see I'm getting 72, right? It should be 72,060. Let me just do an analysis here. 96,080. When I look on the income statement provided up there, we have our sales return, which you are supposed to be subtracting before doing any apportions. 12, I think it should be 1,200. Sales return. How much is my total net sales? So 96,080 minus 1,200, I should be getting 94,880. Then you apportion times 9, you divide by 12, getting 71,160. The other one should be the difference now. 94,880 minus my answer. 23 should be 23,720. 23,720 there. Let us go to the cost of sales. My cost of sales, you are able to get 20,850, right? Times 9, you divide by 12. I can see the first one should be 15,638. Let me just round off, right? 15,638. Then the other one would be how much? The difference now. The cost of sales of mine was how much? 20,850. Minus my answer, you're supposed to be getting 5213. Concurrently getting your gross profits. Let's just get our gross profits. So my gross profit for the last one should be how much? 23,720. Minus answer, you're getting 18,508. Right? Then we have 71,160 minus 15,638. Getting 55,522. Now, let me less allowable expenses. How we have discount received? Let me look on the question. Yes, we have our discount received. So let us factor it first. The discount received we had back here is part of my allowable taxable incomes. Discount received. So the discount received from the ledger or the income statement provided was 350. So when you apportion 350, so you just need to take 350 times 9 divided by 12. We are getting 263, right? 350 minus my answer, supposed to be getting 87. Right, 87 now. Because you get 88, itakuwa 351. Now 87 plus 508, getting 18,595. And this one should be 55,785. Now let us less allowable expenses.
allowable expenses. And we are going to be starting the first one. The allowable expense is provided the additional information. We are supposed to be looking on the payments which were made there. And in this case, I'm going to be starting with the first one, which is the interest on loan. So the interest on loan of ours should be how much? The interest on loan under the additional information number 1. The interest on loan, because there is a loan that we took there, interest on loan should be how much? I can see it was 8% of 6,000. 8% of 6,000, you are getting how much? 480. So when I'm getting 480 here, right? 480 times 9 divided by 12, getting 360. No. 8% of 6,000, right? Getting 480. So the first one should be 360. Here should be 120. Should be 120 there. Now, after the interest on loan, we are supposed to be looking on the next expense. I can see on additional information number 2, we are looking on electricity. So during the year, we were able to pay certain electricity there, bill, right? And in this case, when I look on the additional information number 1, we were being told there is there must be something there. Let me see how much. Inventory, machinery, rent owing, debtors, loan, blah blah, all that. But we have been told there that under the electricity, in note number 3, the rent expense related to a private residence, so that is a disallowable expense. In addition, electricity paid includes 50,000. We have to be subtracting that for personal use. So in this case, we are taking our electricity. I can see our electricity was 750 minus 50. This gets 700. So 700 times 9 divided by 12, getting 675. Then 700 minus my answer. Here we are getting 25. 25 there. Now let us go to additional purchase of the machinery. So during the year, we purchased certain machineries there, right? Our machineries were amounting to how much? Purchase of machinery. Tulinunua ngapi? Tulinunua 16,400,000, right? We purchased 16,400,000. So there is a machinery here. Na unajua sasa hujaambiwa hata hii type gani ya machinery. So si tutaicharge at the rate of 10%. So just take 10%, we multiply by the purchase of the machinery. We purchase machines amounted to 16,400. This totaling to 1640. So 1640, we apportion it times 9, you divide by 12, getting 1230, the first one. Then 1640 minus my answer, we get 410. We get 410 there. Then in this case, when you go to after that, we go to another. I can see note number the firm's amounting number 4. We have already done with it. Number 5 completed with it. We have note number 6. I think we were able to factor that. 7 done. Number 8, we have been told salaries and wages include accrued salary to partners of 2.4 million, shared equally among all the 3 partners, 2.4 million. So how are you going to be dealing with it? Let us go up there and we look on the salaries and wages which were given on the income statement, and we'll be able to find the salaries which were given there. Wages and salaries was 6,100. Wages 6,100 minus 2.4 million, which was related to partners. So how much is this? 6,100 minus 2,400. We are getting that 700. Once you get that 700, you can just be able to apportion. So this is 2775. That's 700 minus answer. The balance is 925 for 3 months. Now, from there, we can be able to look on the income statement. We factor all the expenses which already have not been considered. I can start with the rent, which we have been told it relates to the private residence, disallowable. Bad debts, I can just be able to make my assumption and I say, under the aspect of the bad debts, right? The bad debts, we can be able to say they were general since they are not specified, then they become disallowable expenses, right? They were not classified. Then we have wages and salaries. We have dealt with it. Loan interest, we have factored. Depreciation is allowable. We have insurance, right? We have insurance here. We just put it here. Right? We are discussing about our insurance. Right? Let me just have pensioners here. And then another one here. Right? So our insurance, which we are being given there, amounts to I think 1450. So when you take 1450 your portion, the first one should be 1088. The other one will be how much? 1088. Then the balance will be 1450 minus answer, and then you are getting 362. The other expense which I can see, we did not work on it. It is the repairs, right? We have repairs. So when I look on the repairs, I can be able to see our repairs given amounts to 300, right? Times 9, you divide by 12, right? So here we are getting 225. Then on the other side, we are being given how much? 300 minus my answer, getting 75. So let me do the totals for my expenses. So I will start with 75 plus 362, plus 925, plus 410, plus 25, plus 120. We are getting 1917 here. That is the expense for the total expenses for 3 months. When you look for 9 months, we have 360. We have 675. We also have 1230. We have 2775. We have 1088. And then we have 225. We are getting 6353. At the end of the day, our taxable business income, right? The total taxable income will be how much? So in this case, I'd say 55, 785 minus my answer. Here we are getting 49,000, right? 432, you can confirm the answers. The other one is 18,595 minus 1917. We have 16,678. 16,678. 16,678. Now, from there, now we can be able to shift our concentration to allocation schedule. Let me do my allocation schedule here. Right? Allocation schedule, partners allocation schedule will be done here. So remember also you are going to be separating the periods. So in this case, we are discussing about 9 months. We also have 3 months here. 3 months. So in this case, we factor, we are discussing about the 9 months, they were 2, A, B. Then we put the total there. Then for 3 months, they were A, B, C. Right? We have A, B, C. Then we have C, and then you factor the totals at the end there. Now, we are going to be starting with the terms and conditions provided in the question. And I can see the first one would be salaries. So the salaries for these partners, I can see we are being provided with the salaries in note number, the last one, I think. So the salaries to partners were 2.4 million. The first thing that we have to be getting is the total for the 9 months, the total for 3 months. So 2.4 million I multiply by 9 and divide by 12. Here we are getting 1,800, right? Then for the other guy there, because it's 24, it should be around 600. Now, in this case, you also have to be factoring how they were sharing the profits, the salaries, and we are being told they shared equally among all the 3 partners per month as applicable. So in this case, it means here should be 900. Here should be 900 because they are sharing equal. Then here should be, each should be getting 200, 200, 200 there, right? Now, the other thing that I was able to see in the question, which is affecting the affecting our allocation schedule should be the interest on drawings. Interest on drawings. And when I look on the interest of drawing, they were affecting only one person and it should be deducted. We are being told in note number, there is some interest on drawing somewhere. Let me see. Where are they? Chioma, can you be able to see them? Are you able to see interest on drawings? Good. We can see some interest on drawing somewhere in note number 5. We have been told including the sales figure is 30,000 for interest on drawing by B. So in this case, we have to be taking 30 times 9 divided by 12. You know, here we were dealing with 23. And also here we are dealing with 7, right? And this 7 is affecting only one person, B. And also this 23 is going to be affecting B alone, right? So the other guys are not affected with the interest of drawings. Do we have anything here? We say no. What are we supposed to be doing? Let us share our profits and losses. Let us share profits, right? In this case, when I look on the profit for 9 months, the total here was 49,432. Then the other one here was around 16,678. So how much are they supposed to be sharing? So you just need to take 49 of 432 minus 1,800, right? Minus 23, and we are getting around 47,655 to be shared. And when we go to the far end, it will be 16,678, right? Minus 600, minus 7, right? We are supposed to be getting 16,085 to be shared. 085 to be shared. So in this case, let us look on the question on how they were sharing these profits and ratios. Where our question started, we are being told that they shared the profits and losses equally. So in this case, if I was able to divide by 3 for 3 months, I'm going to be getting each member, right? Each member getting how much? Let me see. 16,085. We divide by 3. Each is getting 53.62. 53.62. This should be 53.61 due to share. Due to share the figure that the effects of rounding off. Right? Then when we come to 9 months, we are talking about 47,655 divided by 2. Who you are about 23,828. We are about 23,000, right? 827. So how much is this? What is the total? So in this case, let me start with the for 9 months plus 900. I'm getting 24,728. Then the other one would be 900 minus 23 plus 47,655. No. 23,827. And I can see we are getting 24,704. Then when you look on the other side for 3 months, it will be, this will be 55.62. This one will be 200 minus 7 plus 53.62. We are about 555. Then the other one will be 55.61. 55.61. Any question? Any question there?
Mwalimu,
Yes.
okay, I just wanted to confirm something. I think I was not getting at the end, but I want to confirm if I'm correct. When you're given such as a question, you're only going to prepare for allowable expenses.
Yes.
Okay, so hata kama you are given a net profit, you won't take that net profit.
The net profit.
Yes.
Can I be able to do that question? There is one.
Pardon?
Can I be able to do that kind of a question? For the one you can be able to do with the reported losses?
You have a question in mind? I don't have.
Yes.
Okay. Okay, thanks.
So let me go there. For example, when you look on May 2018, question 3A. Question 3A. Can you be able to read this?
Okay, I'll read.
Okay.
Jua and Kali have been trading as partners under a trade name Jua Kali Enterprises since 1st January 2016. They have not filed individual income tax returns for the year ended 31st December 2017. The Commissioner of Domestic Taxes has issued an estimated assessment of 784,000 shillings to each of the partners for the year ended 31st December 2017. They share profits and losses in the ratio of 2:3 to Jua and Kali respectively. They are preparing to appeal against the assessment and have approached you for tax advice with the following details. We have a cash book summary on the debit balance brought forward 1st January 2017, 760,000. Capital, Jua 600,000, Kali 900,000. Receipts from debtors 1.7 million, cash sales 1 million. Rent income 580,000, sale of furniture 170,000. On the credit, payments to creditors 880,000, purchase of furniture 200, motor vehicle expenses 140,000, electricity expenses 78,000, rent expenses 394,000, purchase of motor vehicle 600,000. Salaries and wages for 80,000, office partitions 180,000, general expenses for 40,000. Balance carried forward 2.318 million. Additional information. The cost of furniture sold was 160,000 and had accumulated depreciation of 14,000 shillings as at January 1st, 2017. Profit on disposal was credited to the income statement for the year ended 31st December 2017. All the cash sales were paid into the bank with the exception of 440,000, which was debited in the income statement as general expenses, but related to the following items: partners' children's school fees, 80,000, purchase of goods 200,000, tax appeal expenses 40,000, insurance policy for partners life 70,000, and computer software 50,000. Other information provided was as follows: inventory 248,000 as at 31st December 2016, 362,000 December 2017. Creditors for goods 400,000 December 2016, 280,000 December 2017. Electricity expenses prepaid 42,000 December 2016, 30,000 December 2017. Rent owing 78,000 December 2016, 44,000 December 2017. Salaries and wages owing 20,000 December 2016, 60,000 December 2017. Furniture 160,000 December 2016, 200,000 December 2017. Number 4, the business reported a net loss of 424,500 shillings for the year after deducting the following expenses: salaries and wages for the year ended 31st December 2017, which included partner salary for Jua 100,000 shillings and Kali 80,000 shillings. Rent expense for the year included 20% for private residence for Jua, while electricity included 30,000, 30% electricity bills paid on behalf of Kali's private house. Capital allowances in respect of the business had not been considered. However, depreciated had been debited in the income statement. The depreciation was at the rate of 20%. Sales and purchases for the year were understated and overstated respectively by 20,000. The partners were entitled to interest on capital at the rate of 10% per annum on their capital contributions. The interest on capital was included in the figure for purchases for the year. Required, with supporting computation, advise the partners of the accuracy of the estimated assessment issued for the year of income 2017. Number 2, prepare a schedule of total taxable income for each partner for the year of income 2017. Hint, start with the adjusted net loss.
Very good. You can see now the difference between this question and the other one. And you can see the questions that I have done in this one already. These are some tax assessments which are supposed to be put into consideration to make some clarification on the preparation of the books. So in this case, we have to be looking on the computation, since there are some few things which already we are supposed to be putting in consideration. For example, when you look on note number 5 and 6, you need also to be, regardless of whether we are going to be starting with the reported loss, we have to be getting ourselves in the total purchases, so that we can be able to look on these 2 points, which are 2 points cases which have already been raised there. Now, from that case, then it means when I'm going to be doing my question, it should be done like this. Nothing much is going to be changing since you are going to be computing the creditors control account and debtors control account. The debtors control account, you can be able to open your account there. We are discussing about my balance go down, and also we are going to be taking our balance carry down, right? So in this case, when I look at it in this manner, I have to just be going back to, I just want to go back to the question and I look on note number 3. I will be able to start with the debtors for goods, the beginning balance, which is 240,000 for debtors, 240,000 shillings. Then the balance carried down here, we are being given around the debtors 360,000. Let us look on the items which are affecting these accounts. And when I look at it, I will be able to see in note number somewhere on the debit side of the before the additional information, I can see we have the receipt from debtors of 1.7 million. So if you can be able to allow me to write bank here of 1.7 million. 1.7 million. The biggest thing is that we don't have anything else which is affecting the account. So computer credit sales. Then I have to be taking the totals. So this one should be 260,000. 260,000. 260,000 when you subtract 240. 260 minus 240, we are getting 18 something. 260. So when you subtract 240, you are supposed to be getting 20,000. Right? So in this case, when you're calculating your total sales, we say take your cash sales, add your credit sales. Right? So my cash sales in the question there, I can see we are being given a cash sales of how much? Cash sales we are being given 1 million. Plus credit sales of 1,820,000. This translates to Kenya shillings 28,20,000. 28,20,000, right? Those are my total sales. So when I go and do my creditors control account, right? Still, just open the balance breakdowns here. So the balance breakdown will be note number 3 there. You are being given the creditors for goods, 480, 400,000. Balance carried down here. Balance carried down here. We have said should be 280,000. 280,000. Now, let us look whether we have some few things which are affecting these account years. When I look on note number, before the additional information, I can see there are some payments which we made, and we are discussing about payments to creditors. So the payment to creditors of ours should be around 880,000. 880,000. What is our credit purchases? What is my credit purchases in this case, right? We are getting around 1160. Also here will be 1160. So credit purchases of mine will be how much? 1160 minus 400, getting 760,000. 760,000. Right? So to get my total purchases, as just one hapa, you are going to be taking 760,000 plus. Let us look whether we have any purchases which we were able to make during the year. There is an information note number 2 where we are being told all the cash sales, right? All the cash sales were paid into the bank with the exemption of 440, which was debited in the income statement general expense. But we've been told, but related to the following items, partners' children's school fees of 80,000, purchase of goods, we are being given 200,000 there, right? So in this case, the total purchases of mine should be 960,000, 960,000, right? Then out of the 960,000, those are the total purchases, which we have 960,000. There are some more adjustments which I'm supposed to be doing here. We are supposed to be lessing the interest on capital, which is being included on those figures. So the interest on capital, we are being told, was how much? That information lies in the last note. We have been told the partners are entitled to interest on capital 10% per annum on their capital contribution. So the interest on including the figure of purchases. So it will be 10% of the total of the capital, how much they were able to raise. When you go to the debit side of the cash book summary, I can be able to see the one was able to contribute 600, the other one was 900. So that's total to 1,500. Then you are getting here 150,000. What is my net purchases? What is my net purchases? So in this case, we are taking 960 minus 150, getting 810,000. 810,000 there. 810. That is our net purchases. The other thing that I just want to look on, it is the depreciation, which was already charged on assets. So my depreciation was already charged, and I don't know how much is my depreciation. So I can be able to compute it. I can see bulletin number 3 of note 4. We have been told the capital allowance in respect of the business has not been considered, but the depreciation has been debited in the income statement. The depreciation was the rate of 20%. So it will be 20% of what? So in this case, let us look on the assets which are included, which you are able to purchase. And you can look on the cash book summary on the credit side. We start with the furniture. The furniture, which is 20%. The 20% of 200,000. 20% of 200,000, I think we should be getting 40,000. Let us look on any other asset which you are able to purchase. I can see we also purchased a motor vehicle of 600,000, which was 20% of 600,000, right? We should be getting around 120,000. From there, we can be able to look on other purchases that we did. We have something like partitions, which qualify for WTA, right? But they were able to charge us 20%. The 20% of 180,000, we should be equal to around 36,000. Then the last one we are discussing about, I can see we have in note number 2, where we are discussing about something like, am I seeing the computer software? Let me check. The computer software of ours should be around 50,000. Yes, in note number 2. So software here was also charged 20%. 20% of how much? We have talked about 50,000. Right? This translates to 10,000. What was the total depreciation deducted in the income statement? 46,000 plus 160. Here we are getting 206,000. That was the depreciation which they were able to deduct from the income statement.
There is another thing that I just want to look on, the something like the gain on the disposal of furniture. Gain on disposal of furniture. So in this case, when you look on the gain, you know it's an untaxable income, so it has to be looked at it. Not additional information number one, we have been told the cost of furniture was around 160,000, but we have been told it had an accumulated depreciation of 14,000 at the beginning of 2017. So the profits of the disposal was created in the income statement for that one for the year ended at 1st December 2017. When I look on the cash book summary, I can see that the sales proceeds, was around 170,000. That was the sales proceeds from the sale of that furniture. And in this case, we also need to be looking on we let the net book value, right? The net book value. You know here, you need just to be factoring that information provided in additional information one. You just need to be taking your 160 minus 14, right? The cost of the purchase of the furniture minus the accumulated depreciation. So 160 minus 14, we are getting 146,000. What is the profit on the sale of these seats? So in this case, 170 minus my answer, I should be getting around 24,000. I should be getting around 24,000. That is the proceeds on the sale, or this is the gain. Gain on sale of furniture. Gain on sale of the furniture. So in this case, after doing that, then I can be able to do now my question properly. Now, the question that we are doing here, we were being told to start with we are going to be starting with the reported losses, which were reported, right? Which were reported here. So this is very simple for you. And also for me, right? Should be very simple. Now, we are discussing about Juakali, right? We are discussing about Juakali Enterprises. We are discussing about which year. We are computing for 2017 adjusted taxable income. It might also be loss computation. Now, usiandikange na small letters kama mwalimu, you can be able to write, the heading should be on caps. Now, in that case, we just have to, we need to have two columns of Kenya shillings here. Of thousands of shillings. Thousands of shillings. So in this case, they've said, let's start with the reported loss. Reported losses of mine, as per the additional information number 4, we were given 424,500. I can just use the whole figures, no problem. So 424,500, that was our losses. Then it means I'm going to be adding disallowable expenses. We just be adding them there. The disallowable expenses, we just need to add them back. Now, in this case, when I look on the additional information, I can be able to start with the additional information 2. Additional information 2, where we are being told all the cases was paid on bank of that, except we have been but related to the following items. We had partners school fees for children. Am I reading the correct thing? Let me start with note number 4. Salaries and wages for the year 31st December 2017, which include partner salaries, which is a disallowable expense. So in this case, we talk about salaries to partners. Because of my space to partners, let me combine the salaries to partners. That equates to around 180,000. Well, you'll be having an advantage because utakuwa na 2 entries. Now, when we look on bullet number 2 for additional information, we have been told rent expense for the year include 20% for private residents for Jua, right? So in this case, we just need to be calculating that. We understand very well that it is a disallowable expense. So for rent, we are going to be taking 20%. We multiply by what?
When you look on during the year, how much you are able to pay. How much you are able to pay, the rent that we were able to pay. So in this case, I can be able to see the rent owing. We have accruals. We have 78,000, right? So accrue at the beginning we less. How much you are able to pay during the year, that is what I'm looking for. Someone who can see it.
394,000 on the credit side after
Thank you so much.
electricity.
Thank you. Yes, it was 394,000 minus the balance sheet at the beginning for rent, which I can see 78 plus 44 plus 44. So how much it is? How much it is? 394 minus 78 plus 44. Then you multiply by 0.2, getting 72,000 here. Very good. Now, from the rent, we can also be able to check on the electricity, right? We can be able to check for electricity because also related to the partner, that information for electricity. So in this case, when I look on the electricity, which was all, we have been told the electricity bills 30% paid on behalf of Kali's private resident, disallowable expense. So it will be 30%, right? 30% of what? So when you look on the electricity which you are able to pay during the year, the electricity was 78,000, and you can see these were the prepayments. We said add the balances at the prepayment. When you look on the rent, if it is accruing, the opening balances are normally deducted. So in this case, I say 78, right? It should be 78. That is what we paid during the year. So the electricity which was prepaid at the beginning was 472. So here we add 472. Then we less at the ends. At the end should be how much? 30. At the end is 30. So 78 plus 472 minus 30 times 0.3. We are getting 156,000. 156,000. Now, when you shift down there, you'll be able to come up a point of depreciation. And when I look on the capital allowances, the depreciation we have already gotten here, 206,000. You know it is a disallowable expense. That is my depreciation, amounting to 206,000. That is what was charged on all those assets which you are able to purchase. Now, when I go to note number 5, we have been told that the sales and purchases for the year were understated. And we said at the beginning, when you are going to be understating our sales, they have a direct relationship with the gross profit. It's going to be understated. So in this case, let us look on understated sales. So how much they understated, which proportion they understated with? I can see it was 20%. So in this case, it was 20 over 80 times the total sales of ours. Tulipata sales ngapi? 20,000. Right? So 20 divided by 80, right? Times 28, 20,000, getting 705,000. 705,000. Now, the other one we can look on overstated purchases. And we said, when you overstate, they have an inverse relationship, the opening stock and the purchases. So when they are overstated, the gross profit is understated. So in this case, they overstated it by 20. So it will be 20 over 120. Then you multiply it by, right, the total purchases of viewers, we were able to get around 810,000. So 20 divided by 120, then you multiply by 810,000. I'm getting 135,000. Now, after the purchases, we can go to note number 2 now and analyze it. We can be able to see that we have some school fees children, which is a disallowable expense. School fees for children, right, amounting to 80,000. Right. The other one was we are discussing about the purchase of good 200,000. Okay, but we can see we have been told the tax appeal. It is a disallowable expense. Our tax appeal amounted to
the tax appeal was around 40,000. When I look on the insurance policy, it was related to the partners, disallowable. Partners, this is disallowable, amounted to around 70,000. Then after that, we can also see we were able to purchase an asset, computer software. The purchase is disallowable expense amounting to how much it is? 50,000. Nothing else now. Nothing else to be put into consideration. Nothing else. Anything else? Nothing. Because already I know the motor vehicle expense, those are allowable, electricity, rent, purchase, salaries, office, partitions, general, all of that. Now, what we require there, we just need to be looking on the at the deductions which you have to be making from the question, right? Now, what we're supposed to be deducting there, we start with we normally less the allowable expenses.
Mwalimu, what about these other assets on the credit side of our cash book?
Sorry?
We have purchase of furniture on the credit side of our cash book.
The purchase of?
Furniture. We are not disallowing because we are going to give it WTA.
What I could see is the fact that those assets which we are seeing on the cash book summary, they were not part of the they were not part of what? They were not part of note number 4. Can you see? The business was able to report a loss after deducting the following. So it means they were not included in the computation.
Okay.
So what we're supposed to be doing with those purchases, which we can see there, we are supposed to be treating them the right way. For example, the purchase of furniture, we give them WTA. So let us calculate the capital allowances now, which they were supposed to be computed, but they did not compute. So in this case, when you look on the first one is the furniture. So when I look on the furniture, I'll be able to realize that it normally falls on class 2 at the rate of 10%. So it will be 10% of how much? 200,000. This translates to around 20,000. Now, after that, I can also see we have another thing which is affecting us. It is the purchase of motor vehicle. Qualifies for class 1 at the rate of 25% of the cost. So 25% of the motor vehicle, the purchase of the motor vehicle, which is 600,000. This translates to 150,000, right? Then from there, we have, after the motor vehicle, we have partitions. So the partitions, we have 180,000. Qualify for class 2 at the rate of 10% of 25,000. 180,000. Translating to 18,000. Right? From there, we also have general. Do we have any other? Computer software. Kuna kitu kama hiyo somewhere. Computer software was 25%. The cost yake ilikuwa ngapi? 50,000. So how much is this? A quarter of 50? Getting 12,500. 12,500 there. Then we also have to be deducting untaxable income, which was the gain on sale, the gain on sale of furniture. The gain on sale of furniture, we can see we computed it and we were able to get around 24,000. So how much is your deductions? How much is my deduction there? So when I look at it, we have 20 plus 150 plus 18.
plus 12.5 plus 24. We have 224,500. 224,500. We have 120 plus 120 plus 135 plus 705 plus 206 plus 156 plus 72 plus 180. Hapa naona nikipata 1694,000. So minus 424,500 minus 224,500, right? So how much are we getting here? How much are we supposed to be getting at the end of the day? Let me check. Very good. 1694,000 minus 424,500 minus 224,500. I'm supposed to be getting around 1045,000. 1045,000. That should be my adjusted business income. That is my adjusted business income. Now, we are supposed to be advising something there, and we are saying the estimated assessment is inaccurate, hence Joe and Kali should appeal, right? The estimated assessment, the estimated assessment we have said is inaccurate. Hence Jua and Kali should appeal. So what I just want you to do, go and nitengeneze the allocation schedule for Jua and Kali. The allocation schedule for Jua and Kali. Before we conclude, I can just be able to look on something. Let me just look on something here. Right? Let's look on something here. We are discussing about taxation of rental income. Taxation of rental income. And just small notes, which I just want to clarify there. And we can talk about effective 1st January. Effective 1st January 2021. 1st January 2021, rental income is categorized. It's categorized into two, right? One, we are supposed to be discussing about the rental from commercial houses. The rental from commercial houses. Two, we have to be looking on the rental from residential houses. From residential houses. Rental from residential houses. And for, we just need to elaborate it, and we say, for commercial houses, we are saying a withholding tax of 10%. The withholding tax of at the rate of 10% on gross rents. On gross rent is not final. The commercial houses, the withholding tax of the 10% is not final. The net rental income. The net rental income, in this case, we are looking on the gross. We are looking on the gross rents with less allowable expenses. With less allowable expenses is determined.
You have to be determining it. After the determination, we are saying add it to other incomes. You add it to other incomes and tax it accordingly. And tax it accordingly under withholding tax relief. And our withholding tax relief is granted at the rate of 10%. Those are the things that you have been seeing me when I come across the rental income, right? I can be able to treat it whether it's non-residential or residential houses. Now, in this case, we need just to be understanding what is the threshold for the separation between the commercial and residential houses. And we can say for residential houses, a withholding of 10%, a withholding tax at the rate of 10% will be final. If the gross rental income, does not exceed Kenya shillings 15 million, does not exceed 15 million per annum, does not exceed 15 million per annum. And we are saying if the gross rent is above, if the gross rent is above 15 million Kenya shillings, if it is above 15,000 shillings, it will be taxed. It will be taxed the same way as commercial houses. It will be taxed the same way as commercial houses. That is why you normally see me making a lot of assumptions when I come up with the rental income is residential, because the threshold which we put into consideration does not exceed 15 million. And if we are going to be having one which is exceeding 15 million, then it will be able to, we are going to be taxing the same way as commercial houses, Any question? Any question there? Good. So the only question that I have for you, you should be going and do November 2019 now. Question 1C. November 2019, question 1C. You are supposed to be doing it as an assignment. Just do it as an assignment, and then we will be able to move from that point, whereby next weekend we are supposed to be handling taxation of insurance. Taxation of insurance companies. That is what we are going to be doing next time. Taxation of insurance companies. That is what we will be able to handle next time. So if we don't have any question, let me stop at that point and see you next time. Bye-bye.